The fear gauge is sounding an alarm even as US stocks surge. Remain vigilant. That's the apparent. The VIX index, often referred to as the market's fear gauge, is up over the past 3 sessions, as of 1:40 p.m. in New York. At north of 60, the higher reading belied the brisk advance of more than 2% for the S&P 500 index over the same 3-day stretch. It's the first time, during Friday's 1.1% advance in the S&P 500, the VIX, which measures the 30-day implied volatility of the S&P 500 based on out-of-the-money options prices, also moved higher. That's despite the week. This marked just the 11th time since 2004 that the VIX advanced, while the stock benchmark rose at least 1%, according to macro risk advisors derivatives strategist Vinay Viswanathan. The options market is unwilling to lower its pricing of risk further despite impressive market strength, he wrote. The stock's up the event premium built into options that encompass the month-end G20 summit at which US President Donald Trump and his Chinese counterpart Xi Jinping are slated to talk trade is off its recent highs, Viswanathan notes. He recommends Pravit Chintawong-Banish, Wells Fargo's equity derivatives strategist, said in a note that the fierceness of market rallies is contributing to firmness in the volatility index. For the most part, up moves count as vol too, and have been pushing realized vol higher, he wrote. VIX actual. On Monday, the signal sent by a relatively muted retreat in the VIX appears to be a mirage linked to the demand for upside. The most heavily
Raindrop, drop top, smoking, no cooking the hot pot. Fucking on your bitch, yeah, that. Looking up, open the park,